All right, guys. So this is literally the first time I opened the charts. Um, I had a fucking rough wake up morning, so I'll literally do the daily bias live with you guys right now. So like every day, start off on the monthly time frame, both NQ and ES. Right. Remember to always have both NQ and ES open at all times. All right, so the only thing I see on the monthly time frame really is that ES took out all-time highs, that we have fat S&T here at the monthly highs. Does that mean we are bearish? No, not necessarily on the monthly time frame, right? Because if I zoom out, I see that the overall movement of price is to the upside. And all-time highs is always going to be a bullish confluence. I know it goes against everything that we've kind of learned, right? That when we sweep higher time frame liquidity, that usually you should switch bias, but only when it comes to all-time highs do you maintain that bullish bias. So took out all those monthly highs on yes, but not on NQ yet. If I go to the weekly time frame, things are a little different, right? What do I notice? I notice that we're pretty choppy right now. Okay, usually like what I want to see is this. Look at this, all clean upwards movement, right? But when I'm looking at this, it's super choppy. So I got to be extra careful, probably go a little lower size in the next couple days until things clean up, right? I want to see constant motion in one direction. It's much easier to trade. What else do I notice? I notice that we have obvious targets, okay? Previous week high is the obvious target for longs. I'm going to put draw liquidity there. Copy, paste, make sure that it's the same high on yes. Then I look below, okay? In case we're bearish, where are we going to go? Definitely this is the draw, right? This weekly low that has been swept, just a nice wick there. That's a very obvious draw on liquidity. So go here, do the same thing on yes. Okay, then I move on to, now I've created a range, right? Now I've created a range within the, where I want to see price trade within, okay? Once price moves out of this range, I'm done trading. Whether it takes the high or the low, I'm done trading because that means we already made a significant move towards the clear draw on liquidity. So this is my range. I don't trade past this range. Then the daily time frame, go on both. Okay, what do I see? I see that we have fully closed that new week opening gap, which is beautiful, right? Because now I can just see where price really wants to go. We have previous day low and previous day high pretty close. Day low right there. Day low right here. And then we have previous day high very close as well. Okay, but what do we look? We definitely look more bullish than bearish. Why? We made this move down, we come down, we sweep this higher time frame liquidity on the daily time frame, and then now we're making a move back up, right? So it looks like we want to go up to these weekly highs. We have these relative equal highs on the daily time frame. Things look a little more bullish than bearish, but we have not fully decided to be bearish or bullish yet. Got to look at the 4-hour time frame. All right, what does the 4-hour time frame look like? Looks like a big consolidation. Looks like I can already tell that Asia or London session just accumulated and didn't do jack shit. So that's going to be super important. Now, what do I see at previous day low? What do we have? We have this 4-hour bullish gap that has been holding for 2 days. Okay, so I'm going to mark that out. What do I notice on the higher time frame? We had that 4-hour unfilled bearish gap that still hasn't been tapped into. This is something that I wanted to see get tapped into yesterday and it didn't. So that's honestly a good target for longs. So we have this gap that's holding and we have this gap that's holding. So for the higher time frame, it's a very obvious bias, right? I am bullish as long as this 4-hour bullish gap is held and respected. If this 4-hour gets inversed, I am now bearish to these lows. If the 4-hour holds, I'm going to maintain a bullish bias until we hit this 4-hour unfilled bearish gap. Once this 4-hour bearish gap is filled, then I'm going to have to redetermine the bias. So from the 4 hour, go to the 2 hour. What does the 2 hour look like? 2 hour looks kind of bearish. All right, we're inside of a 2 hour bearish gap. Let's see if we have an S&T. Okay, no real. Actually, we do have an S&T here on the 2 hour time frame. And then we made a move down lower. So this is pretty bearish confluence. It looks like we definitely want to come back and tap into that 4 hour. But we also have an S&T at this 2 hour low, right? So now we have another condition, whether this 2 hour bearish gap holds or not. If it holds and be respected, then I want shorts. If it gets respected and we continue to respect bullish structure, then I want longs towards previous day high in that 4 hour unfilled. Now, most important thing here is going to be the previous sessions on the 15-minute time frame. Right, I want to come here, turn on my indicator, ICT kill zones, and I want to turn on equal highs and lows. All right, same thing on ES. On the 15-minute time frame, what do I see? Bang, search and destroy model already presenting itself. Asia session accumulated, London session broke out of the range and literally took out Asia highs and then took out Asia lows. So what do I expect New York session to do? We just took out London lows on ES. So I'm expecting us to go up and take out London highs. So right now we have an SMT at London lows and we're in a search and destroy.
Market open.
That's market open right there. We're in a search and destroy model. So I'm expecting sweep of London lows and us to take out London highs, right? We just took out London lows on ES. We have a bullish S&T there. We have 5-minute bullish structure if we can create it. All I'm going to wait for at this point, I'm confirming my bullish bias. All I want to see is a tap into a 5-minute bullish gap and an inverse continuation out of that. Let's go! Let's go. We just made a 1 minute. Come on, baby. Give it to me. Give it to me, you good little fucking slut. All right, I'm in there. Oh, my God. No! Wow. So gay. So gay. One of the gayest. It's exactly what I wanted to see. A+ setup. Didn't play out. It is what it is. I would have taken that trade 10 out of 10 times. We got to tap into the 5-minute bullish gap. We got to tap into both 5-minute bullish gaps on ES. So we even had a little SMT on the 5-minute time frame. And then we had a cheeky little 1-minute inverse when we're 2 fucking ticks away from London highs. So obviously I'm going to smack that John. And yeah, so evals are not looking fresh today. But, you know, that's what Fridays are for. Trade your evals. As long as the fundeds didn't have to sacrifice, we're good. Bash. I mean, bro, honestly, like, I can't complain. I mean, this is exactly what we wanted to see happen. It's good to see that the idea for the trade was the correct one. All that happened was a little stop raid. But it's good to see that, you know, the trade played out exactly how it should have. All right, let's go over some journal entries, baby. And for you guys that don't make journal entries, please stay on and just look at how useful they are. Because going over the date, like writing in that journal entry, going over it, getting feedback is very useful. So I'll go over Samaya's journal. Right, last time she made a lot of great journal entries, gave her feedback on it, and now she's continued to upload it. So this is great stuff.
Yeah, I know. When are you pulling up to Boston?
March, like
You should come for the Boston Marathon weekend.
March or April.
Boston Marathon weekend is a good weekend.
I'm down. When is that?
Let me look it up.
Got some false signals that I acted on. We never really swept liquidity. We just swept the low from NQ, real gas
Third
mitigate.
Monday in April, April 20th.
Okay, but let's try to plan the trading tournament on that week.
Alright.
Liquidity aligned with 1 hour. Oh fuck! I just clicked something. My bad.
You just deleted Sumaya's journal, bro.
I actually almost did. Alright, I was waiting for the 15-minute 800 book map. Alright, the book map liquidity disappeared and we tapped into the. Okay, so first of all, get rid of the book map. Alright, this is not going to help you out. Liquidity and volume can be clearly analyzed by how the market's moving. Alright, you don't need an indicator telling you how much volume and liquidity is in the session right now. It's very, very obvious to see when there is a lot of volume in the markets, right? When you start to get those clean, like 1 minute, 2 minute, 5 minute bullish candles that are just pumping like we did once we broke out of this range today, right? This is how I know there's volume in the market. When we made this candle right here, this is what tells me there's volume in the market. This is what tells me that everyone was waiting for that London low to get swept and then for the search and destroy model to get completed where we're going to go take up that London high. This is all I need to see to know that there's volume in the market. Okay? You don't need a fucking indicator that's going to tell you when there's volume and liquidity in the market because that's just going to distract you from paying attention to what's actually important. Okay? So you don't really need the book map. All right, so you got your entry here, and then it doesn't look bad, but I would say that the thing is we already took out this internal high, right? So we came up, we took out that internal high, clearly rejected that area. So does it really make that much sense that you are retargeting this area that already got swept and already got rejected from? Not really, right? I would wait for a more significant liquidity sweep before getting into that. I see here that you marked out this fair value gap or whatever this range is and this low right here. I would have probably waited for price to come down, tap into whatever this is, sweep the liquidity, and then get my entry, right? Because when an internal high gets taken out, you don't want to just re-enter right away. When internal highs get taken out, you want to wait for a liquidity sweep and re-entry. Wonder if we would close our trade early. No, you don't close your trade early unless there's an SMT, right? Don't be moving your stop loss until there's an SMT. If you're gonna take a trade, you have to be very confident in it, and you have to understand that once you take it, you took the trade, right? Now you got to let it play out. Losses we take are to make our system stronger. My biggest setback in trading has always been accepting my losses. Yeah, dude, accepting the loss, like understanding that it's part of the game, right? Like everybody loses. I lose. I lost today. I just lost in front of you guys, right? Am I mad about it? Am I going to go fucking buy 10 accounts and revenge trade and blow them? No. Why? Because I've been through this before. I've been in the game long enough to understand that losing is just normal, right? Like until you learn how not like to accept, because you don't have to accept your loss. You like it shouldn't even cross your mind that you need to make up for it right away. It shouldn't cross your mind that like, oh, I lost. I need to make up for it. I need to make the money back or I did something wrong. No, it's part of the game. What you should be asking yourself is, did I break my rules or did I follow my rules? Is this an A+ setup? Those are the losses, right? For me, a loss is breaking my rules, is not waiting for the A+ setup. That is a break of my, that is what I have to consider a loss. And that's the difference between profitable and unprofitable traders. if you think about the loss in terms of money, you're never going to learn long term. Long term growth is understanding that losing money is not a loss. Breaking your rules is a loss. Not waiting for the A+ setup is a loss. But actually losing money is not a loss right now, all right? We trade on prop accounts. If you lose $500, you didn't actually lose $500. If you lose $2,000, which is the loss limit of an account, you didn't lose $2,000, okay? You lost $100. Still bad, right? But understand that that's not the loss that you should be focusing on. All right, I don't know what all this shit is on the right hand side. I'm not gonna lie. If it works for you, I'm glad. I don't know what all that shit is. Saw a 30-second earlier that would have hit. Don't look at the 30-second. Confluence is bearish structure, tapping in 5 minute, 1 minute versus value gap. Good volume on those candles and premium. Okay, so this doesn't look bad. This doesn't look like a bad setup if I only focus on this. If I only focus on this on your actual entry, not a bad setup, right? Because we have this low here, we come up, we tap into this fair value gap, and then we get a clean inverse to the downside right after. So this looks like a good entry. But if I zoom out, what do I see? I see that price is literally moving sideways. I see that price is accumulating, okay? Price is literally just moving sideways, okay? Edging these highs, edging these lows, and we're literally just moving sideways, right? This is a big sign of I want to stay away from this, okay? Also, the clear draw here looks bullish, right? If you look at this structure, we made a huge move up, okay, right here on the left-hand side. You can see it on ES as well. Look, we made a huge move up, okay? Look at this fat fair value gap right here. What's happening? Price is coming down and testing that fair value gap. What's happening to that fair value gap? Being respected. Price comes back down, taps into the fair value gap. What happens? It's respected. Price comes down into this order block that tapped into the fair value gap. What happened? Respected. So, right? So what are we doing? We're constantly respecting this bullish move up, this bullish fair value gap. So if anything, you should be looking for longs. The only short that exists is if this fair value gap gets inversed. But since this fair value gap is holding and it's holding strong, you shouldn't try to short until that confluence that's holding us up, that's sending us up higher, gets inversed. Right? Because how do I determine the bias? How do I determine the target? I have to ask myself, what's in between me and my target? What could hold me back from hitting my target? And here there's a clear answer that this huge fair value gap is still getting respected. Right? So until that gets disrespected, I can't change my bias. The bias has to maintain bullish. So nothing really wrong on the lower time frame with this trade, but if I look at the higher time frame, clear bias is bullish and clear conditions look bullish, right? So the setup isn't necessarily the problem, the bias is, right? Didn't fully understand what Edo meant about the 15-minute condition, but after hearing his explanation, the trade recap, I get it now. Beautiful. Guys, this is what I fucking love to see. Look at this sentence. Look at this sentence, bro. If you like, come on. If you didn't fucking understand something when I'm in live trading, which happens all the time. Why? Because when me and Pipa are live trading, we're focused on trading. I don't have like the time or the mental power to focus, like be super locked in on trading and also explain every little detail as much as possible. So where do I go in and actually explain those details? In the trade recap. So if there's anything you don't understand from live trading, ask questions, watch the trade recap, write notes on the trade recap, and then come back into the Discord and ask any questions you still have. All right. NQ hit, yes. hit to manipulation lag, SMT, light bulb 1 minute, high premium 1-to-1 R looked easy to smack even though it was in a 5 and 15. De-risk went break even too early, got tapped out. I don't think the break even is too early. I just think you got a very late entry on it. Right? Because if your break even is that close to where you're entering, you probably shouldn't be entering the trade. You should wait for a pullback, get better risk to reward to your break even, and then enter, right? So you should get in like up here, right? That's something that me and people do all the time, right? If our break even or our take profit is too close to the entry, you either wait for a pullback and you get in, right, off the pullback. So now you have good RR, or you just simply don't take the trade. And you got to be okay with it playing out without you, right? But you got to wait for a pullback.
Limit orders come into play.
Yeah.
I mean, obviously, at a minimum, you need a 1-to-1. So if you get an inverse at a place where it isn't necessarily a 1-to-1, you can just set a limit order at a 1-to-1, and then it'll fill you as soon as price reaches that point.
Yeah.
We have a couple videos deep within like, you remember that video that we had, that great limit order video, Edo?
Yeah.
It explains how to set limit orders, how it can be useful.
Yeah, go into the recording section, scroll up and look for the word limit order and watch that video. But here, look, for example, we had a 1 minute bearish gap here that was created. If I see this, instead of entering 2 ticks away from my break even, I would set a limit order at that 1 minute and then get in when it taps into that.
Fucking yogurt. What are you like? How are you supposed to lay a spoon into the yogurt cup without it toppling over once it's empty? Oh, all right.
Yeah. Hey, but that's okay, Sumaya. Like, bro, confidence grows with time, right? Give yourself time. Understand the strategy, understand the motion, the model, everything perfectly, and then start upping your risk.
Realest thing ever. Bro, it's so annoying.
Yes, I agree. This is great. Yeah, when you enter, see, that's the thing. Like when you enter a trade, you shouldn't feel anxious. You shouldn't feel scared. You shouldn't feel nervous. You shouldn't be like your heart rate's pumping up. Why? Because before you enter a trade, you need to ask yourself, will I be upset if this trade hits my stop loss? You need to paint a picture in your head. You need to imagine the trade hitting your stop loss. That's the first thing you need to do. If I close my eyes and I imagine the trade hitting my stop loss, am I mad if the trade hits my stop loss? No, because I would be more mad at myself if I didn't take the trade because it's a great setup. Bang. That's how you know that it's a great setup and you should take it. And now, when you enter the trade, you already went through the emotions of the trade hitting stop loss. It's kind of like a way to like trick your brain into not having emotions once you enter the trade. You should make yourself feel and imagine that you already hit stop loss and that you're still confident to take it even though you saw it hit your stop loss. And now once you're in the trade, you have no emotions if it goes to your stop loss. You have full confidence in the trade, and whatever happens, happens. You accept it because you already saw it happen. You already envisioned the worst possible outcome, and you still decided to take the trade. So that is a great trade if you still decide to take it after you imagine the stop loss getting hit.
Yeah, and I want to bring that point back to when you're calculating how much you're risking. Your mentality should never be, how much can I make? It should always be, how much am I willing to risk? Because the moment you start thinking like, okay, I need to make 300 because I need to pass this funded account, or I need 300 to get a fucking payout, that's where you're gonna start losing hella bread. Because you're thinking about how much you need to make instead of how much you're willing to risk. And that's really important. Like every trade I get into, the amount that I'm risking is the amount that I am willing to lose. I'm not setting my TP to the amount that I want to make. I'm setting my stop loss to the amount that I'm willing to lose. I think that's super fucking important when you guys are calculating risk.
Yeah, completely agree. I'm gonna clip that because that was a great statement. Exactly, bro. Those are the two things that you need to focus on for sure. Let's go back.
Bro, I clipped you with that fucking. Did you check the chat?
What?
Check the chat. Did you see the pic I sent?
Yeah, I did. Idiot. All right. Signal to exit would be when 1 minute inversed in the opposite direction. Again, this is what I'm talking about. So you're entering right at the bottom of these trades when that's not where you should be entering. Um, unless you probably entered here, I'm guessing. That would make sense. Little accumulation, manipulation, distribution, yeah. Just be careful with market conditions, right? A lot of trading is being able to recognize bad market conditions. That's a huge part of trading, right? And if I see this chop, 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 the 1 minute literally looks like a barcode, I'm gonna wait for a big break out of the range before I touch anything. I'm gonna wait to confirm that price looks clean on the 5 minute time frame for me to like even touch anything, right? So definitely make sure to like when you see price action look like this, wait for a big move before you enter off of anything. Wait for price to completely break out of that range and start to make structure on the 5 minute before re-entering or taking any trades. Also, I don't know what all this stuff is, but if it works for you, it works for you. I don't know what this stuff is. Beautiful. Yes, losses are part of your plan. Absolutely. Great stuff. This is amazing. Love to see this. Okay, this is great. Great progress, honestly, Samaya. This is great progress from last time that I read your journal. Things look good. Definitely try to make your journal entries as detailed as possible. Write a bit more about like how you're feeling, how you want to do, what your vision on the week is, things like that, what your goals are. I think like making this as personal and detailed as possible is really going to help you out. So great stuff. How do you trade fundeds? Like what risk per trade? So I have a 600 daily loss limit on my fundeds. I take the first trade for 400. And then if I really want to take a second trade, I'll take it for 200. No problem, Samaya. No, trade. Do you want me to do yours? How do you trade? I just answer that. Nah, I never risk like 800 per trade on a funded account. No. Yeah. Unless I have like 100K funded. Sometimes I'll have 100K funded and I'll risk more on it. But if it's a 50K funded, then I'm doing 400 and 200. And on the 100K, I just multiply that by 2, right? I'll do 800 and 400 if I'm on 100K. Yes, even if the account is fresh. And you scale risk or nah? No, I don't. I don't touch that risk. That's my risk for the whole funded account always. Once your buffer is big enough. Nah, I never touch it. Unless like, dude, cause usually like I'm not the type of person who like tries to build a huge buffer on evals. Like I'll usually just take payouts out. Um, but if I do get to a point where like maybe I hit one massive trade and now my buffer's fat, then nah, I still won't up my risk to be honest. Unless I have like a 5K buffer, then I'll up my risk. But like I'll up my risk on like one or two trades. Like if I see like a beautiful, beautiful setup, like best of the week, then I'll up my risk. If I have a buffer, but it just depends on the setup. Trey, I'm gonna go over your journal, Trey.
Nah, nah, nah. Yo, everyone who's staying on, dude, good shit. You guys actually want to learn. It's really important, and I commend you all for being committed to the process. Wait, yeah, this is technically recap time. Okay, thanks. Uh, Allons dans.
Okay, so this is a beautiful setup, Trey. This Friday one, beautiful, beautiful setup. Um, but you took this 1 minute inverse when there are multiple inverses in the leg, right? So when you're gonna take a mech model, you have to take the highest time frame inverse, okay? Or you make sure that all of them get in. Like for example, you took a 2 minute inverse here. 2 minute inverse, okay, but what happened? There's another 2 minute bearish gap here. There's another 2 minute bearish gap here, right? So either you find a 3 minute that encompasses all of this, or a 4 minute or a 5 minute inverse to go off of, or you have to wait for all of these 2 minute bearish gaps to get inverse before you enter. Because that's the actual mech model. It's either the highest time frame inverse or all of the inverses of that leg.
It's like the last inverse, the
Yeah.
one nearest to the.
And yes, no news Friday. Shouldn't be trading fundeds or anything important, or or should be very low size on Fridays. Yeah, definitely. Seems like you need a little refresher on the mech model. I suggest watching that video that I made, the long one on YouTube. Goes over the mech model. All right, so retrace into a 15 minute bullish gap with a 1 minute inverse. Type of five earlier. Should have been a break even trade. There's a second setup that would have hit, but I was in my class with an option day. No, you should never not go to class. Just turn the computer off and not trade, bro. It's not that deep. Like, you don't have to be on the charts 24/7. Mm. Thing is, like, if we're here, if I look at this, first of all, this looks choppy as fuck. Second of all, what I see is you're entering here off of not even a strong inverse. Like, it's not a strong inverse here, right? Because this 1 minute got tapped into 4 times before getting inversed, and even the inverse looks super weak because it's not even like closing above this wick or anything. So this looks like very weak inverse. And we have these stacked lows that have been creating as we're in the 1 minute. So this looks like a stop rate. Is like a classic what a stop rate looks like, right? So when you see something like this, when you see a 1 minute get tapped into 4 times before it gets inversed, and then on top of that has a weak inverse, don't take that, right? Because that's going to be a very it's going to be a very weak inverse. Um, Not saying that there's anything wrong with the bias or the trade. It's a great trade, but you have to be able to determine what's a good inverse and what's a bad inverse, right? Because then it played out after resweeping the low. So I love that you guys are commenting inside of your guys' journal. I think that's great. I think there's a lot to learn from other people's journals. All right, a lot to learn from other people's journals.
Patty took the same fucking trade I just saw.
The 1 minute.
Same exact trade as us.
Yeah, bro. I mean, it was an A+ setup.
Fucking spectacular trade. It's just super unfortunate.
Yeah. It's okay taking continuation long to new week opening gap. Duo. Ready for Target was unfilled 15. Break even at the unfilled 5. This off is very important to me, and I was happy with the mistake. I would really. Yeah, I mean, that looks pretty good. Not sure where the entry is on this. So the mech model has to be targeting unfilled gaps, right? So to me, this 5 minute looks like it's been held. Not really sure where you entered off of. If you entered off right here, then even then, like the 5 minute already got tapped into. So make sure that if you take a 1 minute inverse, it has to be targeting an unfilled 5. And if you're gonna target an unfilled 15, both of them have to be unfilled. Right? This 5 minute does not look unfilled. It looks like this wicked into it already. It looks like this wicked into it, this wicked into it. Not really understanding exactly where you entered, but it looks like it had already been wicked into. But good break even. Mm-mm. Yeah, I mean, this looks like a good trade. Tap into the 15, inverse to the downside. Clearly have London lows right there. That was not a bad trade at all. It's a pretty good trade. Unfortunate that it didn't play out, but that's not what matters, right? What matters is that it's a great setup. So yeah. Um, okay, the 5 minute was unfilled. Perfect. Got you. Yeah, not bad. Not bad, bro. A lot of progress from last time as well. Try to make those journal entries a little more detailed. Like write more about um, kind of like your emotional thought process through the day. And yeah, just keep on, bro. Keep on going. I like the risk that you're using. I like that you're not risking a lot. You're still learning, still getting back into the process. So, so not bad at all. Just keep it. Just keep pushing. Keep pushing. Got you, brother. Keys gave me an idea to journal my rules. Um,
Bro,
fire.
that's amazing. I love that, dude.
Beautiful, bro. Everyone should have one of these.
No setup, no trade patience. Wow. Dude, Sakili, that's actually beautiful.
Mm,
Eddie, can you add my fundeds on
this
your
looks like break even. Here, this is the same setup that someone else took, right? Look at this 1 minute inverse, bro. Does that look like a strong 1 minute inverse, guys? No, right? Not at all. Look at that. Tapped into 4 times before getting inversed. Looks like a good trade here. This looks like a good trade, but that 1 minute inverse I would not trust. I'd rather enter off this fat fucking 1 minute, targeting those highs as break even and hit a 1 to 1. But this is a very weak 1 minute inverse here. Here, I don't understand what happened. You entered your break even points there. Why are you closing here? If your break even point is there, then you should go break even there, not before. Right? Or you mean you should probably try to get a 1 to 1 and then scale off at a 1 to 1 and then hold until your target. Right? Always try to scale off at a 1 to 1. Here you probably could have scaled at a 1 to 1, but don't go break even until your break even point gets hit. And then this also again, bro. 1, 2, 3, 4. 4 times to. It takes 4 tries for this to get inversed, and then you enter the trade. That doesn't make sense, guys. If you see a fucking 1 minute or a 2 minute or whatever it is holding, and it gets tapped into more than 2 times, and then gets inverse, and it's a shit inverse. It's not like an inverse all the way up here. Don't take that. That's just rage bait. That's not a real inverse. Also, after getting break even on this trade, you should probably be done trading, right? Because now your break even point got hit, and now you're trying to re-enter when your break-even point on the original trade already got hit. So it doesn't really make much sense. Guessing that's 1%. This looks. Yeah. So definitely, guys, be careful with those 1 minutes. Be careful with fair value gaps that get tested multiple times and then have a bad inverse. You really need to, yeah, you can add your funded to Tradecopia. But you guys really need to be a little more picky with your inverses, a little more picky with your trades, um, and just trust the process, right? If you're picky about it, if you make yourself have a high standard of trading conditions, right? Like, I want a great inverse. I want a beautiful inverse with good risk to reward, in line with my bias, super strong draw and liquidity. Those are the trades I want to take. And don't be content with anything less than that, right? If it doesn't look amazing and perfect, don't fucking take it. Keep your level, keep your standard of what trade you're willing to take. Keep that shit high. Okay? Keep that standard very high. And you'll see a better win rate for sure. All right, my brother, Sakilis, fucking love you, brother. Um, always let me know if you need anything. Of course, bro, I got you. Does anyone else want or need their journal entry to be reviewed? No? Alright, bet. Then everybody have a fucking fantastic weekend. I love you guys. Make sure that you're watching the recordings in the recordings tab. Make sure that you guys are keeping up with the YouTube posts. They're very helpful. Drop a like on them. Subscribe. Fucking love you guys. I will see you on Monday.
To all of you, I hope you guys have an amazing weekend. If you need anything from us, please do not hesitate.